Perhaps the concern of economic recession is among the biggest challenges that the world may face after inflation. There are early indicators that may help predict the occurrence of an economic recession, such as a significant decline in stock markets, households reducing their spending, and a decrease in demand for goods and services in the markets due to concerns about the economic situation, and companies reducing their investments, expansions, and the size of their workforce due to weak demand driven by negative expectations, as well as the rise in individual debt. High inflation can also be a time bomb, as if it is not managed effectively, it may lead to a sharp economic slowdown and deepen the crisis, which increases the possibility of entering a stage of economic recession. It is important to take 4 proactive steps to protect your money from the effects of a potential recession. The first is not to lose your money in protecting capital from loss and not risking it. It may be the best investment. Instead of investing in stocks of companies with high fluctuations, you can invest in assets, government bonds, or index funds that provide a greater return. Second, invest wisely during the period of inflation that may precede a recession. There are people who suffer from rising prices more than others. For example, someone who builds a house during the rise in building materials prices is affected by the significant increase in costs, so it may be better to postpone such projects until prices stabilize. And if you are thinking of investing, remember that there are companies that produce goods that cannot be dispensed with no matter how high their prices are, for example, but not limited to, pharmaceutical and food companies. You can buy shares in those companies that will continue to produce and sell their products continuously despite market fluctuations and inflation, which will positively reflect on the value of your shares. Thirdly, reduce your expenses and invest in yourself. Try to reduce expenses by dispensing with the purchase of luxuries. This enables you to build a cash reserve that helps you and enhances your ability to deal with financial challenges during a recession, such as losing your job and paying off debts. To reduce financial burdens, also have a skill that increases the chances of improving your job income and increases your chances in the labor market, and thus you can face rising prices or explain job opportunities. Finally, look at the half-full glass. There is an economic rule that says that economic crises often provide the best opportunities for making fortunes. During crises, the prices of some companies decrease, which gives an opportunity to seize their shares at prices lower than their fair value.